G'day folks. Today I thought I'd discuss whether for those looking to become financially free through property investment or looking to build a 20 plus property portfolio, whether capital growth or cash flow is more important. So for those looking to build substantial property portfolios, if you're asking whether cash flow or capital growth is better, well, you're asking entirely the wrong question. So the question you should be asking instead is, how can I accumulate the most good debt possible? So every time you're buying a property, you need to look at, well, how is that going to help me get into the next property? Because the whole key is about serviceability and improving your bank's serviceability with every purchase of every property. So why is this the case? Well, it's as simple as debt becomes irrelevant with inflation. So ultimately what you need to be looking at is, well, is the rate of inflation exceeding the rate of interest that you're paying back? If so, well, you're winning. One of the investing fundamentals that you'll hear a lot of people talk about is that time in the market beats timing the market. And this theory really, I guess, follows that, but in the most aggressive way possible, where it's really about, I guess, maximizing the time in the market and really getting into the market really as soon as absolutely possible and to the absolute greatest, most aggressive degree. So how can you take advantage of the idea that debt becomes irrelevant with inflation, or that time in the market beats timing the market? Well, the first step I would suggest is buying below comparable sales. So what you want to do is really be able to buy something that really there's a layer of inbuilt equity at the time of purchase. That way it decreases your downside risk, but additionally it means that you've got that instant equity in place, where it means that in going to the bank in the future, well, it means you've got the potential to pull out equity and then help you get into the next property. So that's the first stage. So the second stage that's an absolute necessity is that you're buying properties that are neutral to positive cash flow. So why is this absolutely necessary? Well, banks aren't going to lend to you if you're not going to be able to cover your expenses on your next property and the next property. So by maintaining a position where your properties are either neutral or positive cash flow, well, they're going to be able to say, yep, you'll be able to service the next property. So at the end of the day, it's all about getting into the next and the next property. And to do that, well, you need the cash flow coming in at a level where the banks are going to be comfortable lending to you. And you've got that safety buffer as well, where if interest rates go up, well, you're going to be able to cover it comfortably, and you're still going to be able to get into more and more properties in the future. The third important thing that you absolutely need is upside for capital growth. So by that, what I'm talking about is if it's a high-rise city apartment that's brand new, well, there's going to be no element of scarcity there, where there can always be more and more towers built up, and there's never going to be that demand that exceeds the supply, because basically as the demand increases, the supply is going to keep increasing at an equal or greater rate. Same story if you buy a house and land package. Well, guess what? There's going to be more and more and more land releases, so there isn't really that scope for capital growth, particularly if it's brand new. So you really want to be buying in your more established areas with some element of land value and certainly some level of scarcity, where there is that scope in the short to medium and also over the long term as well, for there to be demand that will exceed supply and at a greater rate than we see today. That's really going to be what's going to, aside from just inflation, which will have an impact anyway, but they're the factors you really want in place to really get that capital growth over time. And for those looking to set a hard floor on your downside risk, the fourth tip would be buying below replacement value. So this is something you can do a lot more easily, certainly with units and townhouses, than can be the case with big houses on big blocks of land. But if you have that mindset, that's certainly a really good way to invest, particularly if you're looking to build that cash flow foundation first up and really make sure that you're not losing money and that you're really in a position to really accumulate lots of properties early on in your investing journey. And I want to be very clear that this approach to property investing isn't unique to Dory Invests. So this is very much a concept that I borrowed from someone called Nathan Birch. So you can find him on YouTube under the channel Be Invested. And if you've enjoyed this video, I'd strongly suggest following his channel as well, getting subscribed, because he produces absolutely terrific content, looking at both the broader macro picture, but also looking directly at the property market as well. So absolutely one of the absolute best in the business, and for mine, probably the best in the business. and one where really he's the one that really, I guess, put out the concept that debt becomes irrelevant with inflation. And it's really that 4-step model is really borrowed directly from his good work and his thoughts over the year, where you want to be buying below market value with that upside for growth, with that neutral to positive cash flow and below replacement value. They're all Nathan Birch concepts, and certainly not my own, but nonetheless, they're concepts that I fully endorse for those really looking to build those substantial property portfolios of 20 plus properties and with the desire over time to become financially free through property investment. Of course, nothing in this video is financial advice, and it's purely for educational purposes. But ultimately, when you're looking at your situation, you really need to look at, well, what's my purpose of investing? And if your purpose of investing in property is to become financially free through property investing and to build a 20 plus property portfolio, well, this is a strategy that I would suggest doing more research into and getting more education around. So a starting step with that would be getting subscribed to Nathan's YouTube. So that's Be Invested. So I would strongly suggest getting behind him on there so that you really get a bit more detail and information around how to execute this sort of strategy, because ultimately he's the one that's executed it. He has the 200 plus property portfolio and the whopping big net worth, which I can't even imagine how big it is. So could be $250 million for all I know. So yeah, basically, if you want to get somewhere, well, you really want to be looking at, well, who are those people that are in that position already? They're the ones to follow. So for that reason, I would say certainly get behind Nathan. And naturally, this concept isn't something that is suitable for everyone. So for those that are consumers who just buy luxury goods, buy things willy-nilly, for those that really just want to get into a primary place of residence or buy a holiday home, well, they're lifestyle decisions. So for those that are looking to go down this sort of aggressive strategy, well, you really need to be comfortable living the sort of lifestyle where it's not going to be anything whiz-bang, and it's really about getting as absolutely aggressive and focused as you can on really saving everything with the purpose of really putting everything that you have towards really the next purchase and the next purchase of the next properties. So it's really about basically trying to get as much equity as you can, get as much cash flow as you can, and really build up that servicing so that every purchase after every purchase of every property, it's really helping you into that next one, because ultimately that's really the most efficient way to get to that financial freedom through property investing.